Intel stock, ticker symbol INTC. On the 26th of October, Intel presented their quarterly report where they beat on EPS and revenue. For the upcoming earnings, analysts think they will beat again. Year to date, the stock is up 65%, beating the S&P 500 big time. And people love Intel stock because of multiple reasons. One of them being the dividend, and I understand why with dividend yield at 1.15%. But historically this number was significantly higher. So could this be the perfect moment to buy Intel stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Intel do? Intel is a leading digital chip maker focused on the design and manufacturing of microprocessors for the global personal computer and data center markets. When we check the earnings report, we see that Intel reported 14.2 billion in revenue, down 8% year over year. And this is of course not a good thing, but revenue was reported 0.8 billion above the outlook. Gross margin is flat year over year and EPS is up 11% year over year and $0.21 above the outlook. To me, this is amazing. The CCG segment reported a revenue of 7.9 billion, down 3% year over year. But look at this operating margin, it went up from 18 to 26%. The DCAI segment went down 10% in revenue, but operating income increased 151% to a positive 2%, which is amazing. The NEX segment is down 32% in revenue, and operating income plunged 91%, which is something that really concerns me a lot. For the upcoming quarter, Intel expects to deliver a revenue of 14.6 to 15.6 billion, up 8% year over year. Gross margin to be at 46.5%, up 2.7 ppt year over year. And EPS at $0.44, up 193% year over year. To me, all these numbers look really good. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Intel is a 185 billion market cap company. PE ratio is not available since profit margin is at a negative number. Later in this video I will show you my 3 price targets for Intel stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 52 billion and in this graph we see that revenue went up in the long run. But ever since 2022 revenue went down big time. Margins took a big hit in 2022. Recently they reported negative margins, but it is increasing again, which is a good thing. EPS is pretty much the same story as the revenue and margins. The good part is that most recently it is increasing again. Analysts expect that from here EPS will grow at really high numbers. To me this looks pretty good. For the revenue, analysts expect also high growth numbers in the coming years, which is very interesting since they took a big hit in 2022. Return on assets is sitting at 3%, which is a low number. Return on equity looks really low. And the most important number, return on invested capital, is sitting at almost -1%, which is a bad number. It is also lower versus the 5-year average, which is not a good thing. But I expect this number to increase from here as the company recovers. Current ratio is at 1.53, which is a great number. It is also pretty steady in a healthy range historically. Right now Intel has 49 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Intel has roughly 25 billion in total cash, so they can pay down a big part of their debt. To me, this is looking really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. Again, most recently it took a big hit. Shares outstanding are decreasing in the long run, which is something that I really like. But recently it is increasing again, which is something that I don't like, so keep an eye on this number. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.15%, which is a decent number. Annual payout is at $0.5 and payout ratio is at 163% because of free cash flow problems. I prefer 50% or lower, so right now they have no cash left to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at -9%. Which is really sad. This was because of the dividend cut, which a lot of people actually liked. And if you take a look at these numbers, the dividends paid since 2012, you see that Intel did increase the dividends at a decent rate, but they did a dividend cut of roughly 50%. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked really good. Most recently it is too high because of the free cash flow problems. I expect this number to recover anytime soon. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay at current levels. Overall these dividends look pretty interesting to me. But how about the historical returns? I decided to compare Intel stock with the overall market, in this case the S&P 500. Next to that I added Qualcomm and Texas Instruments. On the 5-year chart we see that Intel underperformed the S&P 500 big time, with 9% return versus 86% return for the S&P 500. This result is including dividends. Both Qualcomm and Texas Instruments beats the S&P 500. On the 1-year chart it looks pretty different for Intel, with a 54% return versus almost 17% return for the S&P 500. Both Qualcomm and Texas Instruments have a lower return. On the 6-month chart it is again looking interesting, with Intel returning 45% return, including dividends, and the S&P 500 is sitting at 9%. On the 1-month chart it is again Intel beating the S&P 500 and the others in this list. So bottom line, Intel beats the S&P 500 in the short term, but in the long run it doesn't look any good. So could this be the perfect time to buy Intel stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 7, 8 and 9%, based on historical performance, their own outlook, but also because of the analyst. For the profit margin and the free cash flow margin I'm putting in the historical numbers, but a bit more conservative. For the PE ratio and the price to free cash flow I'm putting in 15, 16 and 17. It is a big company that is capable of growing in the future again, but it has some work to do. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Intel stock is at $44. I hit analyze and we see only a few green numbers. We have a low price target of $34, we have a mid price target of $40 and we have a high price target of $47. To me the low to mid price target is the most justified here, indicating that this stock is overvalued. My final conclusion on this company is that it can be a potential multi-bagger, but it still is facing some problems in many areas. Yes, the recovery is there and the dividend cut seems to be a smart move, but they aren't fully recovered yet. And to me, the current valuation doesn't align where the business is right now. So I think I will wait a little bit longer before opening a position in this stock. Especially since the semiconductor market has many big names in there that all have something unique. For now, I added them to the watch list and I will keep analyzing them from time to time. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.